I turned down $1 million startup deal, and I would do it again. One decision and I walked away from the deal every founder wants. In this video I will show you exactly why I said no, what was really behind that offer, and why saying yes would have been the biggest mistake of my career. I'm Oskar, I've built 2 startups myself and coached over 50 founders, and if you want to build a real $1 million startup, this will save you thousands and years of mistakes. Now let me show you exactly what happened when I got this $1 million deal. So let me tell you about this deal. Now, I'm not going to name the startup for privacy reasons, but here is what you need to know. 2 founders, smart guys. This was during peak blockchain hype. Every second pitch had decentralized in it somewhere. So the idea was simple. A messaging app like WhatsApp, but stored on blockchain for more privacy. So no company owns the data. On paper, it sounds kinda cool, right? They had raised $12 million at around a 40 million valuation. They had a fancy pitch deck, beautiful branding, and some big name investors. So it looked very, we are the future of messaging. And then they came to me and said, hey Oskar, we would love your help to build this. Product, strategy, positioning, all of it. We can't pay you a salary right now, but we will give you equity. So the offer was basically huge valuation, $12 million in the bank, top tier investors on brand, hot tech buzzwords like blockchain and AI, and I get equity if I help them build it. From the outside, it looked like a no-brainer. If you tell this to most people, they would say you would be crazy to say no. Now, at that time, I was building my own startup and money was kinda tight. So this wasn't some comfortable, I'm rich situation. Saying yes would have been the safe choice. So yeah, it was tempting. But instead of jumping in right away, I did something different. Something I wish every founder would do. Now pay close attention here, because this can save you years of hard work and thousands of dollars. I ran it through my 6-step checklist to see if this startup could actually make it. I use this exact checklist with every startup I work with, and I use it for my 2 startups as well. It basically quickly shows you if your startup can succeed or if it will fail. So when this offer came in, I asked myself these 6 questions about their startup. Let me walk you through it, and then I will show you how their startup scored. What is the painful, urgent problem? Who exactly is it for? Is there a real market and real money behind it? Do we have the right team to pull this off? Do we have proof of demand, not just opinions? Who are we competing with? And why should we win? In a minute I will show you how this $40 million startup scored and why I walked away. But before that, I want you to actually use this checklist for your startup. You can download the full 6-step checklist in the description below. Grab it, save it, and run your startup through it. It can save you thousands and years of mistakes. Okay, so here is how they scored. What is the painful, urgent problem you're solving? Their answer was basically people care about privacy. They don't want big tech companies owning their data. That sounds nice, but it's not a painful, urgent problem. If you look at how people actually behave, they still send private stuff over Instagram DMs or WhatsApp every single day. People say they care about privacy, but they don't act like it. So for me, that was already a red flag. The problem you solve has to be really painful, not just interesting, not just cool. Then I asked, who is this for? Who will use it? They said, everyone who cares about privacy. Normal users, basically anyone, which means no one. When you build your startup, your target audience has to be super clear. Not everyone who cares about privacy. One very specific group of people. And the more specific you can be, the better. So again, no clear audience, red flag. So I said, okay, cool. But what about the money? Who pays? The logic was, we will get a lot of users and we will figure out monetization later. Maybe premium features, maybe enterprise, maybe data storage, maybe tokens, whatever. My gut dropped for a second when I heard we will figure out monetization later, because that is not a strategy, that is hoping. So there was no clear business plan, no proof that anyone would ever pay for this. And if people like your idea but would never pay for it, you can close your startup immediately. So that's strike 3, no real market or money. Now, regarding the team, the founders were smart. They had strong technical backgrounds, a good network, they were good at fundraising, obviously. But here is the problem. They had no real experience with B2C apps. They had no deep understanding of user behavior. This is important. You need the right people on your team, not just smart people. People with the skills and the experience your specific product needs. So let's call it partly good, but risky. So I asked, is there any proof that people would use this? This one was pretty simple. They had no users, no MVP, no pre-launch waitlist. What they did have was investor excitement, a good pitch deck, and lots of conversations where people said, yeah, that sounds cool. But these are opinions, not real demand. And opinions don't pay your bills. So if you build your startup because your friends tell you, yeah, that's a cool idea, you're in for a rough time. So that's another red flag. So far, there were a lot of red flags, but it really fell apart when I asked about the competition. They said, sure, there's WhatsApp, Telegram, Signal, but they're centralized. We are different because we use blockchain and no one controls the data. But if you look at it from a user perspective, they already have messaging apps. Those apps are free, fast, and all their friends are there. And some of them, like Signal, are already very privacy focused. And when I asked, okay, but why would someone leave WhatsApp or Signal and move their entire life to your product? There was no real answer, just better privacy and decentralized. So here is what we had. No painful, urgent problem, no clear target audience, no real money, strong technical team, but incomplete, no proof of demand, and competing with giants with no clear reason to win. So with that checklist, saying no became surprisingly easy. Because now it wasn't a decision based on fear of missing out or a shiny valuation. It was, does this make sense if I remove the hype? And the answer was, no, it doesn't. So I said no. And they went ahead without me, which is totally fine. And you won't believe what happened next. Over the next 2 years, they built a big team. They spent heavily on development and marketing. They kept pushing the story, privacy, and decentralization. They burned through $12 million. And after all of that, they still had no real traction, no real revenue, and eventually they went bankrupt. They basically burned $12 million to learn what a simple checklist could have told you in 1 week. Now here is why I'm telling you this. This is not about making fun of failed startups. I have failed many times. You have failed probably many times. That's normal. The real point is this. When you build your startup, run this simple checklist. If you can't check these, you don't have a startup, you have a story. So right after this video, run this checklist through your startup. If it passes, go all in. If it fails, fix that before you spend another dollar. So now you know what you need to do to build a strong foundation for your startup. If you want to turn this into a real, successful business, watch this video. I will show you a powerful 5-step roadmap that you can use right now for your startup. And if you found this video helpful, make sure you hit subscribe so you don't miss any pro tips on how to build a successful startup. My name is Oskar. See you soon.